Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
G'day everyone and welcome back to another instalment of Property Showcase. I'm your host Tom Gilmore, Partnerships Manager for Smart Property Investment here. It may sound a little tinny on this podcast today. That is because we are adapting to the COVID-19 social distancing rules. But speaking of adapting, that's mostly what our topic's going to be about today, using the market to your advantage. I'm joined by a fan favourite of Property Showcase here. You would have heard his name previously before. His name is Goose, Goose McGrath. He is from dashdot property buyers agency. Goose, how are you going?
Mate, I'm fantastic, actually. I'm loving this new environment. I don't want that to sound morbid or morose or weird or whatever, but as you said, it's a time to adapt and it's a time to, really innovate and think about how we're doing things. And I'm personally very well. And I'm enjoying the opportunity to find new and better ways to succeed in this environment. So,
mate, the best thing about you, I swear to God, is the smile, the flamboyant energy that you bring to any conversation. To anyone who's never heard Goose before, he is very much like this in person. It's not just for show. It's very much face value. So just before we get into three major points that I want to talk about today with you, Goose, I just want all the listeners to really, whilst you're listening to this, actually challenge, potentially what Goose is saying, or if not, actually align yourself and really have a hard think about what is being spoken about in this podcast. And if you generally feel that may be you in a particular situation or scenario right now, or perhaps, maybe you don't simply agree with what we're talking about on this podcast, I really strongly encourage you actually pick up the phone and get in touch with Goose. Send him an email, get in touch with, obviously, via the social pipes and whatnot, and we'll touch on that in a second. But again, I really strongly encourage this. So jumping straight into it, Goose, we're using the market to your advantage. Now, who are the types of people who are making the most of this current market right now?
Well, mate, straight up, there's really two types of people. Not to be too simplistic with it, but there really are only two types of people in this current market when we're talking about property investors. There are the fortune tellers and, the guessers and the dreamers. They're the ones that are thinking about what might happen in the future, waiting for the headlines to change. They're the ones waiting to follow the herd, right? So they're the people that are going to act too late anyway. Now, no one knows what the future is going to hold. And as I like to say, he who tries to live by the crystal ball is destined to eat broken glass. Now, and the same thing is applying right now. There's a lot of people out there saying, I want to invest. Oh, but should I wait? Should I stop? And they're just waiting for that change. They're waiting for someone or something else to give them that key indication. That's one bucket, the fortune tellers. And then you've got the other bucket, which are basically people who are taking action now, but are prepared to look at the situation pragmatically and find solutions. And I can tell you that they're the people that are making the most amount of gains, and they're the people that are going to benefit longest or the most in the long run. Because if you think about it like this, when everyone else starts to move back into the market, and they will, because this will not last forever, when they start to move back into the market, that is what is going to drive up prices. And you want to be on the front end of that, not on the back end. So that's where I see the two key categories of investors right now.
Certainly. Would you also say that those two types of people, irrespective of which one they are, does this apply to first home buyers or perhaps the most savvy investor who may have 5+ properties in their portfolio?
Look, I think that's an interesting question. I can't really speak so much to first home buyers per se, because I think that that's really going to come down to their own personal situation. But when I'm talking about property, people who want to buy a property in general, and it really shouldn't actually matter whether you're a first home buyer or a 5+ property investor. The reality is, if you are following the right fundamentals, you're going to be able to make a good decision. The reason I say that I can't speak to a first home buyer, there are suburbs that are going to be affected. There are suburbs that currently are affected. Okay. So it's impossible for me to say, first home buyers just go out and get stuck into it, because I don't know where they live, don't know if it's a good idea, don't know if that's the situation there. Investors, though, we're talking about a different type, a different psychology based around the purchase. And what we're looking for is opportunity. Now, something I really want to point out right now is I am not going to sit here and bullishly say, everything's great in the market and everyone should race out and buy properties. Absolutely not. For some people, it's not going to be the right decision, and that's okay. And I also don't think that people should go out and just start buying willy-nilly because we're in a dip, in inverted commas. there's a very massive risk that people are going to be trying to catch falling knives right here. And what I mean by that is they're going to be trying to catch the bottom and that they can get hurt on the way down. Now, I think, my personal opinion, now there are going to be some good opportunities out there where you may see some price reductions and you may be able to seize a really good opportunity. But I think that there's something that is fundamentally broken if you are chasing the losses, because what that says to me is you're chasing something that has corroded underlying fundamentals. And that to me represents a very high risk proposition in the current market.
100%. And that almost falls in actually quite well into the next point, because I mean, it's almost like you're following a type of formula. And for people who obviously know you, you do have your Holy Trinity formula in the background as well. What are the principles for success in this environment, or any type of environment for that matter?
Yeah, well, full disclosure. So towards the end of March, we had a number of buyers that we were buying properties for. Towards the end of March, when everything started to go a little bit haywire, and let's be really honest, it went haywire for everyone, and everyone was a little confused and didn't know what was going on. Full disclosure, I said to all my buyers, I said, hey guys, we're just going to stop for a minute. We're just going to take a big deep breath, right? Because the most important thing for me is to understand what are the best ways that we can move forward in this environment, not recklessly, safely. How do we succeed and not just act in haste? So we took a long look, took a long step back. I participated in a variety of different research projects. I did my own personal research deeply. We found that some markets are heavily impacted, particularly tourism-based markets and stuff like that. We then looked at what we were already doing, because I was prepared to pivot and change what we were doing if that was going to get better results. Now, what we have found has reinforced and reinstilled the strength in our overarching principled philosophy, which is the Holy Trinity, which I'll talk about in a second. It has firmly confirmed exactly what we do, which is essentially to look for cash flow positive properties in high growth areas with value add potential. Now, in the areas that we were already buying, we were buying in areas where the vacancy rates were, say, 0.5%, maybe 0.7%, or even say 1%, maybe. Now, if those areas get affected and the vacancy rate doubles, if you double from 0.5%, you're only doubling to 1%. That's extremely tight still. You're also looking for diversified economies that don't have too much single source dependency. And in fact, where we're actually seeing the greatest buoyancy and the least amount of risk in terms of rental deferrals and stuff like that is in the sub $500 rental price point. So this kind of all fits within our key categories around what we're looking for, where we're looking, and how we're doing what we're doing. The people that are the most stressed out at the moment are where the rents are a little bit higher and typically where they're going to be negatively geared, because then they're trying to support that too. And that's where we're also seeing the highest levels of mortgage stress and potential defaults.
Fantastic. Oh, mate, I couldn't agree with you more. So look, I suppose, like you've almost just said it before now, you've proven that this methodology works, right? I don't want to say, let's put you on the spot and let's make a prediction for what you think is going to be 3 months from now, 6 months from now, a year from now. No one's got a crystal ball, as you said. No one. We can go by the facts of what we know. We can follow our formulas, and most of the time, we're probably going to get it right. But what from the results that you've seen, what are clients seeing right now from what they've used with your formula?
Mate, you're 100% correct. I have no idea what's going to happen ahead. What we can do is we can look to the past and we can look at what we've managed to achieve so far. We can look at the fundamentals, because strong fundamentals are always going to win. If you position yourself in an environment which is less likely to be impacted, it's more likely to rebound faster on the other side. We know this. This is just a fact, okay? Because it doesn't have as far to catch up to get back to normality. It's going to accelerate ahead. Now, that being said, I don't know what the future holds. What I can say, though, is we've taken a look back at our clients, real clients with real results, to see what have the results been of our research process, our principle-based approach, and what are they actually getting. Now, what we've actually found is across all of our clients, particularly over the last 12 months, we did an analysis over a 6-month period. So anyone who had a property for 6 months, to give it a bit of time to settle in and to look at the valuations, what we found was that the average yield was 5.8%. The average growth over 6 months, or the median growth, should I say, was 8.2% over 6 months. So now, in all of those cases with our clients, these are people that haven't yet had to use the value add strategy in all of those cases. They haven't had to even pull that lever to get those results. So that's a combination of buying at the right place, the right time, at the right price. And also, because of the price points and the areas we're investing in with low vacancy rates, no one's really finding any issues with tenancy defaults or mortgage stress so far. So at the moment, everything's holding completely steady, and I couldn't be happier with the results for our clients.
Yeah, mate, I can only imagine. That's quite confident. And obviously, it's not just a bold statement, but mate, that's actually unreal. Because you honestly think look, there's more than one way to invest with a strategy. There's more ways to invest in property, right? So the fact that this is working is insane. Like, this is unreal, but it just proves it's proof in the pudding.
Absolutely. This is real results with real people, right? This is not pie in the sky. Oh yeah, I reckon this is going to happen. This is actual stuff that's actually happened, verifiable. And these are our clients. And this is what is so awesome. Now, I don't know what's going to happen in the future, but what I do know is if you take a principles-based approach and you stick with really good sound philosophies, principles, and strategies, you're going to be good for the long term.
Fantastic. Well, to anyone listening, as I said towards the beginning of this podcast, I really strongly encourage, that you get in touch with Goose. And whether it is just to have a chat, have a consultation, whether it is you are looking to, buy your next property or potentially your first property, whatever it is, I really, really strongly encourage you to get in touch with Goose. I do personally. I have a chat with Goose all the time, not just about property, but again, his counsel is very sound. So Goose, how do we get in touch with you?
Well, there's really we've used this time to optimize, right? And we've really got two scenarios where we can help people, because I'm all about helping people more than anything else. Now, for some people that are ready to take action and want to get into the marketplace and really want to take some decisive action, they're the action takers that want to seize the opportunity and want to use the approach. We have an application process. We don't work with anyone. It's by application only. And that's quite deliberate because we want to make sure we're working with the right types of people. If you would like to apply to work with us to get the results that our clients have been getting in the past, head to dashdot.info/application. That's simple. Fill in the application form. I'll be in touch. If you are not yet ready to buy, but you want to be part of a community that is full of like-minded people on their way to wealth, that really want to succeed in property, but maybe you're not quite ready to take action just yet, we have started a new platform. It's basically almost like a social network for property investors, but more than that is going to be training, suburb deep dives, and heaps of stuff that's not normally available to the public. We're going to be presenting in there in a really values-based way. And you can head to theinvestorlab.com.au to find out more about that. And so they're really the two options. And I encourage you to reach out through either of those mediums and see how we can help.
Fantastic. I can confirm I'm a subscriber myself. So just for anyone listening, I am backing this. So it's filled with very good content, whether it be obviously, from an article perspective, whether it's the podcast you guys are also doing, whether it's the base sort of fundamentals of investing to, not just in property, but just in general life as well, and establishing who you are and actually challenging your own personal perspective on things. It really is a huge help. So hopefully all of you found that super, super insightful. Goose, thank you so much for joining us, mate. But until next time.
My absolute pleasure. Speak soon.
G'day there and welcome back to another instalment of Property Showcase. I'm your host, Partnerships Manager, Tom Gilmore here at Smart Property Investment. Jumping straight into it, guys. This podcast or segment, I should say, is going to be focused on the first-time investor. That doesn't mean to say that it's not going to be applicable to everyone, but anyone who has felt a little bit confused or perhaps even fearful in this current COVID market that we are in, I think this podcast is really going to give you some answers about what you should do, what next steps are, and who you should be getting in touch with to ensure you're making all the informed decisions to educate us in sort of making these right decisions. He's a wonderful friend of ours. You would have seen him spread all across Smart Property Investment on the website. You would have heard him many times on the Smart Property Investment show with Phil Tarrant. He is also the Best Buyers Agent of the Year 2019 at the REB Awards. Paul Glossop, mate, how are you going?
That's quite the introduction, mate. Thank you very much. I'm very, very well. How about yourself?
Yeah, I'm very well, thank you. Keeping well in these strange times. How's things going for you?
Yeah, look, definitely keeping well and safe, as well as my friends and family, which is for me the most important thing, obviously, as no doubt with everyone else. I think we're sort of, as we're recording this now, we're sort of come out of what I think is the initial fear and the unknown of March and April, and coming out of the back end of April now with some very, not that I try to be partisan with my opinion on politics, but I think very, very well-positioned economic decisions, both federally and statewide. And I think we're now in a position as a country where property has already proven, based on CoreLogic's April data, to be a very stable as well as a very, very strong future asset, which is ideally going to allow many people to prosper in the next few years.
Yeah, absolutely. And look, let's focus on that topic of I suppose, the current. Well, actually, you know what? Let's rewind it just by a few months. I remember quite strongly, particularly at the beginning of this year, we had almost everyone complaining, there's anywhere between 50 to, even 100 people at auctions all around the country, which is fantastic. People are buying. It was a really strong buyer's market, dare I say, still is. And now there's no one at auctions, and it's actually easier to perhaps ascertain a property.
Yeah.
What's your sort of sentiment on that? I mean, I'm trying to get into the real brass knuckles here of what's actually going on around the country, and you are the best person to speak to about that. I've only got a bird's eye view. What are you actually seeing in this current market? Sort of, even data aside, what you have hands on, what's going on, what are you seeing right now?
Yeah, it's probably a bit of a broad synopsis, because right now we're buying between, and to give you a cross section, we're buying between Perth, we're buying between Melbourne, Sydney and Brisbane as we speak, literally. And we're actually, I lie, because we're also buying in Canberra right now. We've got a property that I know we're working on, hopefully going to be closing on in the next 24 hours. So we're buying obviously in a very, very wide range of different markets for different price points, different objectives, different reasons. Those markets are greatly different as far as how transactions have always occurred, but also right now how things have changed and how transactions are happening. And that is actually something that we have to stay very current with, based on the fact that every state's got their own changes to their stages of their lockdown laws and how they're being lifted and how many people can inspect properties. Are auctions back on? And we're at the point very close now where auctions in New South Wales being lifted, open homes being lifted, etc. So the one thing as a business though that actually hasn't changed, and yeah, we've gone through probably a very strong 9-10 months of auction conditions, probably more specifically in the key auction markets of Sydney, of Melbourne, where they've gone back through their boom time conditions of 80% clearance rates, is that our focus is and always does remain buying property with as little competition as possible. The reason why that's important to us and is important to our clients is that the way we've set up how we negotiate with vendors, with property managers, and sometimes with vendors directly, is that we don't want to be looking at highly advertised, ideally no auction properties, and even properties that are going for sale via private treaty. We don't want to look at advertised properties where possible, because the job that we have is to get the property as cheap as we possibly can, and that ultimately means by not competing. So the way that it's changed my business and my team's interaction with their vendors, as well as with the agents, the property managers, and everyone else we're trying to work with to get property secured, actually hasn't changed. The beauty of it is our actual contacts are very well conditioned into what we need from them when we do want to see a property. So we've already known that, we've conditioned to say, well, before you even send me anything, I want to know what the vendor wants. I want to know, is there anything that I need to be aware of? Is there any other reasons as to why they're selling? Why isn't the property going on the market in the first place? All these questions that you want to know when you're buying an off-market property, they're already ready for those questions for us. So we're actually able to transact really quickly. But it does pose its challenges, obviously, prior to COVID-19, because we didn't have the same, opportunity. When you go through boom time auction conditions, agents very rarely want to talk to us if they're going to take a property to auction. So our job is to make sure that we've always got ready-made buyers who are ready to buy a property at the correct price. So yeah, look, mate, in short, different states are going through different challenges, and that typically is more so surrounding where the lockdown laws are currently at. But one thing hasn't changed for us is that we're buying predominantly off-market properties. And if they're advertised, we're talking about advertised properties really need to be showing us at a bare minimum, somewhere between 4 and 5% below, not list price. And this is the biggest thing that I find is where people are misguided or uneducated on, is because a property is advertised for a particular price and you buy it X amount below that particular price, it means nothing in the grand scheme of things unless you truly know what the comparable sales are. So that's the biggest advice I could give anyone, is do not understand or do not concern yourself with what they're asking for the property and how much below what you're asking you're getting it for. Concern yourself with what are properties selling for that are direct comparable in land size, internals, condition, etc.
Yep, 100%. I think, this just sort of come into the next question, and I want to sort of angle this about what can, the first-time investor do right now, whether it, whatever's in their arsenal. I realize it's a case-by-case basis, of course, but what can the first-time investor do right now? And I'm going to sort of relay this to something that I saw you do the other day, actually. If anyone tuning into this, Paul is absolutely everywhere, all over social media. He's also on TV, Sunrise, you name it, of course, Smart Property Investment. But you did bring a lot of, I suppose, sort of sage counsel around why it is so important for you right now to buy, because of the fear of the potential opportunity that will never happen again in your lifetime.
Unequivocally, Matt. And if I was to look at a cohort of potential buyers who I would suggest hands down is the absolute best time you'll ever see, if you are a first-time buyer, whether it's an investor, owner, occupier, whatever it looks like, if you're considering or have considered buying a property, and probably a few caveats, your job is stable, your income with your buffers in place is already set, and you know what effectively your repayments will be both in interest only and principal and interest on whatever you're looking at buying at a certain budget, then my advice is go shopping and go shopping very, very soon. The reality of where we're going to be in the next 2, 3, 4, 5 years is a growth market. Unequivocally, I have hands down, and I'm happy for anyone to look back on this whenever they look back on 2022, 2023, SPI can drag it out and look at the story to say, well, he said that and it didn't happen. But I am unequivocally convinced that we will see a very strong growth market in the next 12, 24, 36 months. But the other thing that is obviously on the side of everyone who's looking at buying a property in the next 2 months to probably 6 months is the fact that we've got competition is effectively about 40% below where it was 3 months ago. You've got properties which are transacting, and probably this is probably one thing I don't want people to think they're going to do is go out and get a screaming bargain 20% below what it would have sold for 2 months ago, because that simply isn't happening. However, you are going to pay, in all likelihood, good fair market price without competition and without feeling like you got the wool pulled over your eyes by some agent who's been around the block a few times and knows how to get a bit more out of you, because the reality is they just won't have that second or third backup buyer, which they probably had only 2 or 3 months ago. So make sure your finance is ready. Make sure you understand your numbers. If you've got secure income, cash buffers in place, and you're thinking about taking a step, my advice is, regardless of where you are in Australia, probably bar a handful of local government areas that are reliant on tourism and potentially hospitality, outside of that, go hammer and tong, because you will not see a time where we're going to have 2.5% interest rates on offer for 3-year fixed. You're not going to have a time where you've got 6-month mortgage holidays available to those who are in need. You don't have a time where you've got stimulus across the country of $250 billion that's going to be injected into the economy, liquidity like we've never seen. You've got literally, if I'm talking to a cohort of mid to early 20s right through to mid 30-year-olds, you've got a lifetime of a career ahead of you to earn more money and to pay off this debt, but you will never get a chance to buy at this price with the price of money that's available right now.
So quite literally, the odds are stacked in your favour
heavily. This is the chance that a lot of people who have just said it's too hard, it's impossible. I mean, I posted an article from 1988 on our socials only a couple of days ago, which was a snippet from the Sydney Morning Herald at the time, which basically said the headline was Sydney buyers hit for 6, or first home buyers hit for 6, where it talked about prices exponentially growing in 1988, 89, and a couple of headline numbers there. Average house price in Epping at the time was $54,000. You know, you look at these numbers, and that was at the time where those prices had grown exponentially to $54,000. So people were priced out and were going through hyperinflation up towards that 10, 15, 20% interest rates up to that recession that we had. And even through that recession, we saw price growth actually right through to 91, 92, 93. So yeah, if you're looking at an opportunity, I just can't endorse it enough to say, take this chance to get serious, get your numbers understood, and make sure you know what you're buying. As I said earlier, know your comparables. If you're looking to put down an offer on a property, understand how to find those comparables. And that's what we do on a day-to-day basis, is find the comparable properties. Whether it's an investment, understand what that property is actually worth. Don't listen to the agent. The agent is there to get the best price for the vendor. Try to find a way to get unbiased third-party advice, or people who are on the side of you, which is obviously what we do at Pure Property, is to honestly work on the side of buyers to get the best price within the best location that's going to give them the best result.
Fantastic. Well, that actually sounds like the perfect segue to actually tell people how to get in touch with you. Now, if you don't feel like using Smart Property Investment, or you're even just listening to this show, you can get in touch with yourself. How else can these people get in touch with you? Socials? Where?
Yeah, so obviously we're pretty much anywhere. You Google Pure Property Investment, you'll find us in some way, shape or form. But the easiest way, and literally people can get in touch with me directly to book in a time to speak with me about what they're thinking about doing, about whether it's the right time, what they should be considering, have they got their loan structures in place correctly, anything that they're considering, jump on to purepropertyinvestment.com and they can literally just hit inquire now, book a time directly into my calendar, and we can chat literally within the next few days.
Fantastic. Sounds good to me. All right, everyone, hope you enjoyed this little installment of Property Showcase, and until next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.